hello again, Solis Wealth family. Greg Solis here with the update. First on the family front, summer is definitely upon us here in the desert. Oh my gosh, the temperatures are up. We're up over 100 here, and so now is the time where everybody escapes the heat, and we kind of got the desert to ourselves, which is kind of nice. Emily's in town, as I mentioned before. She is now on summer break, which is awesome. Just finished her sophomore year. She'll be going into her junior year. Again, just having a great experience at TCU. I love it because she's interning here at Solis Wealth Management. So she's had a couple of weeks here. She said she's learning a ton. So love having her here, and she's doing a great job for us. Nicole will be around in June, and so I'm looking forward to it around Father's Day. She's gonna be coming in town, so excited to see her. Jack's doing great out in San Diego, moving along. Monica and I are just having a good old time, and it's nice having Emily in town, and so all is well with the Solis family. I hope everything is well with your family as well. Market-wise, well, again, a lot of volatility, a lot of movement since our last recording. There hasn't been a whole lot of movement up or down. I mean, there's a lot of movement up and down, but as far as we haven't moved or progressed forward much from the last time, we had a great recovery from the bottom that we hit back in April. That's the good news. We're only down on the S&P 500 right now, about 4% as I record this. The NASDAQ is down about 5%. The Dow's down about 6%. So that's a big recovery from where we were. If you remember, the NASDAQ was down about 25%. The S&P 500 was down about 20%. So we've recovered a lot. So that's the good news. Bond yields have been a little bit volatile here lately, which again, as interest rates go up, the value bonds go down. The 10-year treasury is trading right about 4.3%. Again, it's been kind of a little bit volatile there, which is a little concerning, so we're watching that closely. And again, a lot of that has to do with some of these inflation fears that are still out there. But the reality, the numbers are coming in good. The consumer price index is hanging right around that 2 to 3% level, which is what the Fed likes to see. The so-called PCE number that they watch very closely has been pretty tame as well. So inflation has not reared its ugly head. It's come down quite a bit, which is nice, which then will give the Fed an opportunity to potentially lower rates. And we're projecting that that'll happen probably twice this year, probably 1/4% over the next couple of quarters. So we'll be watching that very closely. If that happens, we think that'll be good news for the markets. The big story is still trade policy. That's the reality. The economy is pretty strong. GDP numbers still look pretty good. Consumer confidence even ticked up a little bit. Employment looks pretty good. Inflation's pretty good. But this darn trade policy stuff is making the markets incredibly volatile. So it's a little frustrating, to be frank, but hopefully we'll be able to resolve some of these issues. And as they get resolved, we think we'll see the markets move along quite nicely because the economy is still on a good footing. We have a nice foundation built. What's going on with this Magnificent Seven, those Magnificent Seven stocks have done well. NVIDIA reported last week, earnings look great. So all that still looks pretty solid. So overall, we think the markets are in good shape. We feel the economy's in good shape. It would just be nice to get this trade policy stuff behind us so we can move forward. So hang on tight. Volatility is still going to be out there, but we feel the long-term trend, of course, will be positive. So we just need to hang in there. If you have any questions, any updates, or anything we can do for you, please never hesitate to call. You know we're always here for you. My very best to you and your family. Take care and God bless.